Welcome to episode 41 of Sean's Take on Asia, where we touch on the latest news on digital asset development and policy updates. We are now in the heat of summer, and policy news have slowed down somewhat. With that said, there were three updates in Asia over the past 2 weeks. Let's start in Thailand, where the Securities and Exchange Commission have launched a sandbox for cryptocurrency businesses as the country continues to study the fine line between regulatory restrictions and crypto innovation. This was originally announced back in March, and the sandbox will now open applications for participants from across 6 categories, including digital asset exchanges, brokers, dealers, fund managers, advisors, and custodial wallet providers. This will surely attract overseas industry players to come explore the Thai markets, as the authorities have made several crypto-friendly moves this year, including the extension of value-added tax exemption on crypto trading and the approval for professional investors to invest in US spot Bitcoin ETFs. Thailand is certainly one market to keep an eye on in Asia. Now, not to be outdone in the Southeast Asia region, Indonesia's Financial Services Authority also introduced a new roadmap for the development of digital financial product and crypto assets for the period of 2024 to 2028. I particularly like the title of this roadmap, Welcoming the Future of Digital Finance, Laying the Foundation for Effective and Balanced Supervision, which perfectly describes how market participants and authorities can work together in propelling the industry forward. There are 4 main pillars under this roadmap. Number 1, regulation and development. Number 2, supervision and law enforcement. Number 3, licensing. And number 4, information and innovation. This is very much in line with what the Indonesian authorities announced back in March to mandate all crypto firms to go through a regulatory sandbox before being approved to operate in the country. Let's now turn to South Korea. After going live with the Virtual Asset User Protection Act on July 19th, the Financial Services Commission announced that major cryptocurrency operators such as Upbit, Bithumb, and Coin1 will now be required to pay a supervisory fee on the contribution rate of roughly 2.68 per 10,000 won of operating revenue. This means that for a leading Korea exchange like Upbit, their contribution would be around 272 million won, which is roughly about 200,000 US dollars. Currently, only businesses with an operating revenue of 3 billion won or more are subject to this fee. This new requirement will probably pose significant challenges for many of the smaller virtual asset exchanges, as most continue to suffer operating losses at the moment. Let's see if this may cool down the red-hot Korea crypto markets, as the exchanges were playing a price war since last year, offering no transaction fees in order to attract new users. I am heading to Korea Blockchain Week very soon, and will talk to my network contacts there to learn more on the potential impact of this supervisory fee development. That's all for the week ending August 16th. If you like this content, please follow me on LinkedIn and subscribe to the YouTube channel. Until next time, keep innovating and keep demonstrating the transformational promise of Web3.